Hey guys, welcome back on the channel. Today I bring you Bluefin, the blue token. This is a rebrand from Firefly and they launched recently on Sui. You can see the chart. This is pretty much the all-time chart. They launched at around December the 12th at 30 cents. They went up to 80 cents within 4 or 5 days. Now people took profits, correction went through, expected to happen, and I think the new floor is definitely going to be at around 40-50 cents. It seems to be the case that it's going to be on the 50 cents mark, the new floor, but I expect this to go over $1 during the first quarter of 2025. By the way, this is not a sponsored video. If it would be, I would let you know straight up since the beginning. This is just something I think it's a pretty bullish protocol on Sui. But anyways, these projects that I share with you, I think they have utility behind, and this is definitely one of those cases. Bluefin had, before of launching on Sui, they had been experiencing on Arbitrum, and as we will see later on in the video, they did very well in terms of volume. And now they are moving on to Sui because Sui is a blockchain that has tremendous speed. They don't seem to lag when the blockchain becomes congestioned. That means that there's not going to be delays or anything, which is crucial for a protocol like Bluefin that bets on trading or that is developed around trading and it's built for traders. And personally, guys, this is one of the biggest narratives in crypto, in my opinion. On-chain protocols, meaning that on-chain means they are not centralized, so they are on a publicly available blockchain. And protocols in those blockchains are going to start up as crypto develops, of course, they are going to start up trying to mimic the user interface and user experience of trading in centralized exchanges, but on decentralized exchanges or on decentralized protocols. That's what on-chain means. So in my opinion, these are much better narratives to bet on and invest in other than just meme coins. I'm not that big of a fan of putting big money on meme coins. As you may know, if you are regular here on the channel, those plays will always be very much risky. And for what I like to invest in, I like to have something which has a utility, a strong narrative behind, and Bluefin fits basically the criteria that I put on for my personal investments with crypto. Bluefin is a DEX that launched a beta version on Arbitrum blockchain, an Ethereum layer 2, and through 2023 generated a volume of over $2.1 billion. Looking to develop further, in the last quarter of 2023, they launched Bluefin V2 but on Sui, which proved to be the right move. Trading volume on December alone of that same 2023 was over 3.2 billion. So in just 1 month on Sui, it overperformed the whole year on Arbitrum. Let that sink in. And Bluefin had back then an 80% market share in the Sui ecosystem. Now, many things have changed since then. After all, almost a year has passed since, and believe me, that is an eternity in crypto, but Bluefin remains one of the most promising DeFi platforms on Sui. But what do they offer? And most importantly, how can retail users like you and me profit from using the platform? Well, let's find out. Welcome back on the channel, everyone. In this video, we will explore Bluefin, a leading trading platform on Sui, and how to invest with them to generate DeFi passive income. Bluefin offers trading services to both institutional and individual users, retail like you and me. And long story short, they're aiming to attract big money, not just from retail, but also from big financial players, mainly by focusing on trading derivatives. If you are completely new to trading, let me tell you, derivatives do allow traders to buy crypto at specific prices. So imagine, when swapping a token as usual, we don't rely on an order book, but do pay the market price for the token we are buying. Derivatives, on the other hand, allow users to set up orders in the order book, regardless of the current market price. For example, you can set up an order to buy Bitcoin at 80K. So if it dips down to that price, your order gets filled and the trade is automatically executed without you needing even to be on chain and performing the transaction manually. The same goes for selling at a specific price to take profits when Bitcoin hits, for example, 110, 120, or even more than that. Basically, this is the same as placing a bet. But there are other DeFi protocols that do offer the same on-chain. So why Bluefin? Like I mentioned before, they did have a run already on Arbitrum, so they already have experience with how the blockchain handles trading volume on the platform. They moved on to Sui to improve because it provides the performance requirements for a top-notch trading experience from the user's perspective. That's what the founders of Bluefin were looking for and found in Sui, with high transactions per second and also fast trade confirmation times. On top of that, Sui consistently has low transaction fees. So this is something which is very important when considering trading and the experience that traders do have on chain. As you may already know, trading is a huge part of crypto and arguably the lever that helps the industry to grow. This means opportunities to profit that anyone can take part in. You just need a wallet that supports Sui with some funds and you can start exploring the earning opportunities on Bluefin. If you need guidance for that, I already made a video guide you can follow, link in the description. It will get you started with everything you need to get deployed on Sui, set up a wallet, bridge, all the basic stuff so you can start to use Sui blockchain yourself. And now that we just went over what Bluefin is, let's explore some ways to generate passive income, mainly using their liquidity pools and also the opportunity for the Bluefin token airdrop. As we saw in the beginning of the video, the token has been pretty bullish lately with just a couple of weeks since launch on Sui. But now let's see how to use Bluefin to generate crypto passive income or DeFi passive income by using 1. Their liquidity pools, or 2. The opportunity to accumulate points and qualify for a Bluefin token airdrop. So let's explore what Bluefin has to offer. Alright, so once you log in, and you can do that by connecting your Sui wallet on the platform, if you click the complete onboarding button, you will see there's going to be a pop-up message. You can pause the video right now and read through it, but these are some things that you might want to consider before starting using Bluefin for trading purposes. Now, since this is a trading platform, of course, if you are a trader, they offer everything you need to use the platform, but on chain, there's going to be multiple trading pairs. You can see there's a lot of pairs to choose from, only perpetual so far, but more markets are said to be coming soon. Now let's go on the pools. For that, we'll click on the pool tab, and these will allow us to be liquidity providers. You can earn yield by providing liquidity to Bluefin spot pools. Or you can also earn by lending to professional market makers, entirely non-custodial, by using their stable pools. So let's go ahead and start with their concentrated liquidity pools. Now, if you are already accustomed to be a liquidity provider, to be a yield farmer, you probably already know this, but in case you are new to the game, let me briefly break down what you're looking at on screen. We have multiple trading pools here. So whenever people trade, let's say USDT for USDC, and this goes for any other token showed here, they will pay for this specific pool 0.01%. So whenever you trade a specific volume, there will be a tax, let's call it that, a tax fee applied to your volume of trades. And for this case, it will be 0.01%. This is the fee tier of the pool, okay? Then you have the TVL, which is how much money is deposited on this pool, how much volume it has experienced for the past 24 hours, the fees that have been generated by this specific pool also for the past 24 hours, and those fees do translate into a specific APR. And since we are still very early, you see that after the 24-hour APR for each pool, there will be rewards, and these tokens are the rewards that are being paid for liquidity providers. So in the first case, we have Sui and Blue, the native token of Bluefin. Then we have Deep and Blue here for the Deep and Blue liquidity pool specifically, and most of these pools, if not all, actually there's a couple who don't have rewards, but the rewards are always going to be a game changer for me because on top of the fees, I get some incentives, and this is true for everyone, of course. So, for example, look at this pool here, Blue paired with Sui. The fee tier is really high. I like fee tiers of 0.3, 0.2, even 0.1. They're really good. And Blue and Sui, they have a ton of volume. I mean, look at the TVL and volume ratio. The higher the volume, the better. At least if you look at the 1-to-1 ratio, so if the TVL right now is, let's call it 210K, if the volume would be the same, that would be really good already, in my opinion, all right? But in this case, it's even better. It's almost 5 times higher than the TVL. Considering that and considering the fee tier, 0.25%, this pool is a really great one. It's printing. Look at the 24-hour APR. And by the way, the APRs will fluctuate. So this definitely depends on market conditions. But at the same time, this pool is being also incentivized with the Blue token. So when you get incentives, it's already sort of an airdrop and it's a guaranteed airdrop because just by using the pool, being a liquidity provider to the pool, you have guaranteed those rewards. So you can also go ahead and, by the way, look at this one, Wrap Bitcoin USDC, also being incentivized in Sui, really high APR for a pair that has Bitcoin and a stable coin. So very, very interesting option. But anyways, guys, I'm not going to go and break down all of those pools. The information I gave you so far, you can take it and apply it to any pool and understand what's going on screen, all right? Then, for example, let me also throw this in for complete beginners. When you look at these pairs, VSUI and SUI. So VSUI is a liquid derivative of SUI, a liquid staking derivative. And there's not going to be impermanent loss in these pools because we're talking about tokens which are pegged to their price. VSUI is pegged to SUI price. Only something really crazy would need to happen for it to depeg. But this is true for also other pairs, like for example, the first one we saw, stablecoin pairs. So these will always be pegged to the same price, and therefore you will not experience impermanent loss. That's why you will see lower fee percentage fees, and also why usually the APRs here will be lower. But that's just to show you the name of the game in crypto, in DeFi. The risk here will be lower because of that fact they are pegged to the same price. So you'll not experience a permanent loss, and therefore the rewards will not be as high. But in any case, it's being incentivized and it's a more safer choice in a way. So this is definitely something you want to take into consideration when deploying your portfolio. You can allocate a specific part of your portfolio to less risky pools, for example, and another for riskier pools. And by risk, we consider also impermanent loss to be something which is incorporated in the risk factor, okay? It's not just the fact of a specific token to be a new one or not having all that much market credibility. After all, I mean, everything we're looking here on screen right now, for the most part, they're likely something which already have high market caps. But anyways, let me also throw in this about DEEP and Blue. DEEP is a token for a protocol also which is to be, in my opinion, something you don't want to miss out on Sui. Probably this will explode during the early quarter of 2025. I think it has also tremendous potential. I mentioned it before on my video about how to yield farm on Sui, and it was one of the protocols I mentioned just because of that. They are aiming to be a liquidity layer on Sui. That's going to be huge. They will have a lot of utility just to help out liquidity to flow into these trading platforms, for example. And the whole bullish narrative of trading on chain, you don't want to miss out on DEEP. So even if you don't want to wait for my video on it, just do some research about it, because I think it's definitely worth it, especially with the 0.5% fee tier. This is really high-end stuff. Also Blue and Sui with 1% fee tier. These pools are being incentivized. We're talking about triple digits APR, almost 4 digits in the case of DEEP and Blue. So yeah, this is a really great opportunity right now, and that's also why I'm making this video and sharing this with you. But of course, always do your own research, guys. Just don't follow stuff on YouTube or anywhere for that matter. Learn to do your own on-chain analysis and research. So let's click in onto this DEEP and Blue pool, and I'm going to showcase what's happening on screen, and you can take again this information and apply it to any other pool. All right, So we're talking about concentrated liquidity pools. We have ranges involved, and for ranges you'll have predetermined ones here. 1%, which will be very aggressive. 5% is still very aggressive, but these are predetermined ranges you can use for your convenience if that's what you're looking for. 10% also. This will depend. You'll need to do some back testing yourself. Look at the charts, look at the price, how it has been moving for the specific tokens for a pool. And then you'll have to set those ranges. You can even move the sliders yourself and set your own range manually. There's also the 7-day range. So this is a really cool option for back testing. This does everything for you and sets the range automatically for how it has been moving for the past 7 days. So a 7-day back test, in other words. You can go full range. Full range leaves you protected against impermanent loss, but at the same time, you will not experience those high-end APRs we were looking at. Those, I believe, they are just averages. But anyways, with full range, it gives you more safety, but also lower rewards. Again, high risk, high reward, lower risk, lower reward, all right? Then we have here the breakdown of the estimated APR. And I don't know if you noticed, but as we moved along these different ranges, the estimated APR also changes. So you can see 1%, very aggressive, huge estimated APR, but also probably you're going to go in and out of range very, very often, okay? So don't get greedy. I would say if you're new to the game, you want to be safer, go with full range, for example, test things out, see if you are comfortable with the rewards you are getting, or go with 7-day back test, 7-day range. This would also be a very interesting option, I would say. 500% over that in APR. And then we have on blue the fees and on white the rewards. So this specific pool, rewards paid in deep and blue, and most of the pool is just being incentivized. Most of the rewards APR are just being incentivized. This goes to show how early we are, guys. Later on, throughout 2025, expect I don't know when you're watching the video, but expect it to see these APR or these rewards at least to go down in time. This is just to get momentum and get the platform out there, get users to be incentivized to use it and be comfortable with it and get accustomed to trading with it, okay? But anyways, when you trade or when you deposit liquidity into any of these pools, you're gonna get the fees generated by traders and you're gonna get the rewards, all right? Then we have also a lower risk option with Bluefin stable pool. This is going to be non-custodial loans, so liquidity in the pools is accessible by the industry's leading market makers via a non-custodial sub-account, which means that these market makers cannot withdraw any of the depositor's assets. Profit and loss risk carried by market makers. Moreover, these market makers take on the P&L risk, protecting downside for users. It is the market maker's full obligation to repay any loss. So this is why it's a lower risk type of pool. Underdogs, you can see that they launched May the 5th of 2024. The base APR will reflect only the SUI rewards, but they were also distributing points for the blue token back then. But so far the APR is 26% right now. Again, it's double digits, but that's because of the risk level here, which is lower. But since we are talking about stable coins here, for example USDC, I mean, that's a really good APR for a stable coin. If you click the blue icon here, you will be directed to the airdrop section. If you have been deploying liquidity, they will tell you if you are or not qualified for the airdrop. And about Bluefin, you can see that they are backed by industry-leading venture and trading firms, Polychain Capital, SIG, Wintermute, and Brevin Howard Digital. But anyways, this is the airdrop portal. This is how you can check if you are entitled to get some airdrop potentially or not, okay? If you have been involved with SUI long before I made this video, probably you already earned some airdrop tokens here. And also let me mention they do have a bridge. You click the bridge tab and they are powered by the wormhole bridge. So they have their own on-chain bridge you can use. And in here, for example, if you want to bridge native USDC from other blockchains, you can use it. On the From tab, you just choose the blockchain where you have USDC, and they are going to bridge it to SUI. The same thing happens if you go on the wormhole tab, and that will allow you to again select the chain and token you have, and you will be also able to select the token that you want to bridge to SUI. Wormhole are a very reputable company, so you should not be having any issues, although bridging is a risky endeavor in crypto. And this is it, guys. This is the breakdown on how to use Bluefin, how to take part onto their liquidity pools, qualify for a potential airdrop, and if you have any questions, let me know in the comments. I'll get back to you. I think Bluefin is going to do really, really well. Probably it's a protocol that I will keep on bringing in the early months of 2025 because I'm expecting this to go even beyond its current token price very soon. I think we are going to have a very bullish 2025. So yeah, get ready for it. SUI is a great network to be in. These protocols are also a really good opportunity. They have plenty of incentives, and I think it's overall a great option for people who want to start exploring SUI. And even if you are someone who yield farms a lot like myself, this is a protocol that is reputable, great option here in my opinion. If you want to know more about yield farming, make sure to look out for the Underdog investor group. I'll have a link under in the description. They are a yield farming community, dedicated community that they give you a ton of options there. There's free courses, one-on-one coaching, and if you use my affiliated link, you will get 20% off on your first month. That being said, guys, thank you for watching. If you took value from the video, like and subscribe. Take care. I'll see you on the next one.